to daily market analysis for tomorrow, October 30th, Wednesday, 2024. Let's get into the charts in the tree and see what happened. So there's a Nifty chart that you see. Look at the Bollinger Bands. It's a contraction in sideways movement and it's squeezing and it's consolidating basically. Yesterday was an inside bar, and today it indicates a hammer. The hammer on the top or bottom of the trend could indicate a reversal from there. And overall, market moved nearly 0.5% up. But the big story is in the banks, and the banks have a remarkable recovery. It's up to 3% of recovery has happened. Solid white range bullish candle above moving average, 20 exponential moving average. Solid bullish move. And Bollinger Bands for that is also consolidating and squeezing in, narrowing in a very small range. But yeah, it's having bullish bias as compared to the Nifty Bollinger Bands, which has got still bearish bias because it's below the 20 exponential moving average. So banks have done remarkable move, especially today. And there is a trend line channel which is a cup and handles handle. And any breakout moves that could take on this neckline of the cup could mean that it is the next leg starting. So that's about today's move. Right, today is a festive auspicious day. The markets didn't hesitate to make solid moves in the banking index. So market is basically sideways still. Overall, if you see, it has not climbed to the bull zones with respect to the momentum. Even the Banknifty is sideways and moving up, but Nifty still not managed to climb into the sideways zones. Momentum is still in the bear zones, and trend has improved in the case of Nifty, but it's not crossed over the bull zones. Nifty also does not cross over the bull zones, but a definite reduction in the bearishness is evident from this ADX. Momentum that we are talking about, which is still sideways, is on the RSI. So anything above the RSI 60 is considered to be bullish, anything below the 40 is considered to be bearish. So that's about momentum in the trend. And what else did we? So volatility in the weeks is kind of spiked up slightly. The flattest close like yesterday, not move too much, but markets did move to 1.5% up, and that's at 14.5. So it's very close to the medium voltage. It's no longer, so it spiked up even when the banks made these big breakout moves. The weeks spiking up is a concern. It's probably indicating that there is some kind of fear still that is there. Probably that's the US elections and US Fed decision that comes in the next month, first week. And moving ahead, if we try to understand the different activities in the market, we see that today in different sectoral indices, auto did not perform well, 1.5% down. Pharma also did not do well, it's 1% cut there. Rather than auto and the pharma, the rest of them were kind of flattish, red or slightly green, like it's a metal and reality. Reality has done the best, 1.5% nearly more. So of all the different sectoral indices, if you see, the only sector that's in this short-term sideways more at least is the IT, the metal, and reality just climbed the sideways from the bear zones today. So the pharma is also having this. Pharma, IT, metal, and reality is managing sideways. But auto and FMCG, which is down today also, FMCG is just flattish close today, but overall if you see, it's still in the bear zone at the moment. And let's try to understand these support resistance levels quickly. So the major hurdle is going to be 25,000 nearby zones. 24,900 you have the moving average confluence of 20 and 50. So that 25,000 is the major hurdle. After that you have the 25,433 where we have a previous resistance, and then 25,800 740, which is called the gap, window gap resistance. So that's the resistance in the upside downside. First will be the swing lows at 24,098 or 24,000 rounding number. So that's going to be good support. And after that, it could slip to the 23,900, which is the Fibonacci 50 as well as the previous swing close here in the last August. So that could be support. So 24,000 is a very good support. Maybe the sliding down, and if that is breached, then previous swing low is breached at 23,900 also. Then 23,376 is where the next support is at 200 expansion moving average. There is also a 200 expansion, which is also a Fibonacci 60 that's coming very close to that at 23,210. So 23,210 is supports, last support that we have. Bank index, now that it has taken out the expansion moving average of 20, it is next hurdle would be the 52,800 major hurdle. That's where the gap window is there. The neckline resistance would come in, the neckline of the cup pattern will be taken away at 53,658. Right. After that, you have the gap at 53,763 and then 54,000 rounding number resistances. In between, you have the major hurdle would be to take out the gap, which is coming very close to 53,000. It's at 52,820. Right, and then 53,000 taking out and 53,350. Downside, the first support will come in at the previous swing lows at 50,200. That zone is also a Fibonacci 50 level. If that is getting breached, then it can go to the 200 expansion moving average. 50,000 is breached, means it can go to that 49,500 is there, but the 200 expansion moving average is there. Close by you have previous swing lows that could come in as support at 49,700 nearby. That's a previous swing lows in August. So let me repeat that once again. If 50,000 is going to be made support, if the 50,100 is breached, 50,000 is next support, and 50,000 is breached means it can go as low as 49,500. Well, it could find the 200 expansion moving average. If that is also breached, it can go to 49,000. That's the immediate levels ranked downside. So tomorrow is the Banknifty weekly expiry, so let's look at the levels for that. So Banknifty had a futures high, which is bullish build up, short long build up that has happened today. On the futures, on the options, it is 1.37 put call ratio, which is definitely extremely bullish. Levels, the highest resistance, highest support is at 50,000, highest resistance is at 53,000. A lot of call unwinding has happened here and supports have been written at all these levels between 51 and 52,000. A lot of solid supports there, so definitely absolutely bullish. Right, correlate these levels with the chart levels that we talked about earlier. So FIS has been selling like anything. It's nearly 1 lakh crores of selling that has happened in last October. October is the worst performing month after the COVID. Just because FIS have been selling because of several fundamental reasons of heated valuations, China factor, slowness, IPO money moves, SEBI rules, US election uncertainty and all. So next week, actually November first week has got US election outcomes that's coming on November 5th, and then US Fed rate decisions of the next cut is coming on November 8th or something. Then right, so these two are major events that's coming, so probably the market is consolidating before that event. And that is what the charts are saying. Both demands are clearly showing consolidation. Right. That's all I have. So markets seems to have found the bottom, but the Nifty is edged to catch up. We'll have to see if the banks would lift that up, or is this just another consolidation before it makes new low. So clearing the 25 also is crucial for the Nifty. So that has to happen. It's solid close. Got to keep watching if that happens or not. That's all I have. Thanks for watching. Happy trading, happy learning. Bye bye.